Welcome back to section 4. And in this section, we're going to talk about Forex and how it's the largest financial market in the entire world. One of my favorite things about the Forex market is that unlike the New York Stock Exchange that has a physical location, the Forex market does not have a physical location, which means you can trade from anywhere as long as you have an internet connection. So if you have an internet connection on the beach like this guy, you can go trade on the beach. Really, anywhere you have service to trade on your phone, you can trade. Now, something important to understand is the power of the US dollar in the Forex market. The dollar is the most traded currency, being involved in 84.9% of all transactions. Then comes the euro, which is involved in 39.1% of all transactions. And then third is the yen at 19%. Also, the USD is one half of every major currency pair, and the majors make up 75% of all trades in the Forex market. So almost every investor, business, and central bank own it in the entire world. It's so important to pay attention to the USD and what's going on in the United States economy. The USD is simply king in Forex. In fact, the USD makes up 62% of the world's official foreign exchange reserves. So you may be wondering, why does the US dollar play such a large role in the Forex market? Well, let me give you just a few reasons. First, the United States economy is the largest economy in the world. In fact, the US dollar is the reserve currency of the world. The US dollar has the largest and most liquid financial markets in the world, and the United States has a stable political system. The US dollar is also the medium of exchange for many cross-border transactions. For example, oil is priced in US dollars. You may have heard of it called the petrodollar. So if Mexico wants to buy oil from Saudi Arabia, it can only be bought with US dollars. So if Mexico doesn't have any dollars, they just have pesos, they'd have to exchange their pesos for US dollars in order to buy oil from Saudi Arabia. These are just a few of many reasons why the US dollar plays such a large role in the Forex market. Now, the last thing I want to talk about in this section is liquidity. And you might hear liquidity thrown around quite a bit in the Forex community. So liquidity basically determines how easily price can change over a given period of time. And in the Forex market, since more than 90% of the trading volume comes from traders like you and me that buy and sell currencies, the Forex market is very liquid. Liquidity is very important to be able to profit in the market. Can you imagine if the market just stayed the same and never moved up and down? It'd be pretty hard to buy and sell currencies and make a profit, right? Something really important to know is that liquidity changes depending on the currency and the time of day. So we're going to talk a little bit about that in the sections to come on when to trade, when it's more liquid, which currencies, what time of day. All of that we're going to cover in the sections to come. So if you understood everything from this section, go ahead and move on to the next section and we'll see you there.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.